Huh? Maybe there we go. Good afternoon, Crystal. I this has been like 3 seconds slow for the last couple of weeks, and I'm not exactly sure what that is all about.
Yeah, I
So
noticed that you're like a 3 second delay.
yeah, so I tried to reboot ChromaCam today to get it fixed, and I think it's down to 2.7 seconds. So
Oh, okay. Is it ChromaCam or is it StreamYard? Is there an update for StreamYard?
I did not see an update for StreamYard. I only saw one for ChromaCam, but you're right. It could be StreamYard. It could be.
Mhm. Yeah.
So I'll have to check that.
So y'all just excuse us. We're on a 3 second delay, but it's all
Yeah,
right.
that's right. Technical difficulty. Okay, I am excited about our broadcast today. We're going to be talking about the last three of 6 ways an employer can improve their plan. I don't know if you remember, but we started this topic a couple of weeks ago talking about how employers can improve their plan because often we talk about how employees can get more money into their plan, how they can figure out how to actually make contributions. But we forget that if there was no employer, there would be no plan, right? So it is a it is a benefit of working at that organization. So the last three we talked about were number one, benchmark the plan. Number two, are you protecting your highly comps? And then number three, is your plan rewarding long-term employees? We're going to kick off the next six or next three, and
Hmm.
this number four is one of my favorites. It's actually does your plan reflect the needs of your organization? So, you know what? Before we get to that, um,
Hmm.
I would like to read your bio because we didn't do that, did we?
No, we didn't, but that's okay.
Okay. So please, everyone, help me welcome to our broadcast my friend and colleague, Crystal Mitchell. She is a business coach and consultant. She's the CEO of Mitchell Business Solutions, co director of Recycling Black Dollars, co host of The Business Zone with Crystal and Gilbert, another weekly online radio show. She's an instructor at Mount San Antonio Community College and a certified network for teaching entrepreneurship instructor at NFTE, and a QuickBooks Pro Advisor financial strategist. Hello, Crystal. How you doing?
I'm fine. And yourself? It's good to be here. It's always a good way to start the week off, working, helping, and advising our business owners, as well as today our employees. Actually,
Yeah,
'cause
well,
this
it is.
really benefits them.
Yeah, yeah. So, well, let's jump right into it since I already started.
Okay.
Alrighty. So, the first one is uh, does your plan reflect the needs of your organization? So, a couple of weeks ago, we talked about customization from the employee's point of view. That
Mm-hmm.
is, if you want to invest in green funds, if you want to invest in um, funds that are socially conscious, if you want to invest part and part, or if you want to mix things up that way, you can customize your plan to do
Mm-hmm.
that. And most advisors that I know are happy to do that for you. That's not a problem. I would add that back in the day, it didn't seem as profitable as it does now. But still, there is that option. Okay. Well,
Right.
as an employer, you can do the same thing. And in this first major sense, is take a look at your organization, for example, and see, hmm, what's the age group of most of the people in my organization? Can I customize a plan to fit them specifically? And I don't mean necessarily buy the investments because you should have a well diversified investment lineup anyway if you're working with a good advisor. But you should also perhaps have meetings about how do we get a hold of Social Security? What do we do for Medicare? How do we figure out what we're going to do to transition into retirement. And I like to say, hey, I'm going to transition into retirement, or maybe I'm the son or daughter of someone who's going through that process and I need to help them with that. So if I could get some information about that, that would be great. So that's one way I think of customizing your plan to make sure that you're actually serving the participants and meeting them where they're at, right?
Right.
Conversely, if you have a group of younger people in the plan, you might have a different mix rather than that, because employers don't hire people, and they don't start companies to help people retire. They start companies to get work done, right? So we definitely want to be cognizant of that. You don't want your advisor to come in and say, hey, let's take 2 hours out of your time to have this meeting about Medicare. But at the same time, we want to make sure that we are taking some time to arrange that education, especially so that we can actually reflect the needs of the organization. Have you ever experienced anything like that?
Yeah, actually, I think that's a good idea because if the company has valued employees that have been with them for 10, 15, 20 years, and they brought a lot of value to that company, that the Social Security Medicare thing is extremely daunting for the average person. So if a plan advisor can come in with a team to at least guide them, knowing that it's going to happen, right? They still may even be working, but they still have to apply for they don't have to apply for their Social Security, but they have to apply for their Medicare at 65 when they get penalized.
Sure.
So if they don't do that. But it really truly is a very daunting process. Um, and there's some other nuances to it that you are not, we, the layperson is not accustomed to, especially if it's, in the insurance world or the healthcare world and things like that. So I think you're right on point there is that would be definitely a value. Not that that's the company's business, that's not the business they're in, but making sure that their employees are um, that the employees know that they're a valuable asset to the company that they dedicated, a decade or two to. It makes
Exactly.
sense to me.
Yes, I think you're spot on, spot on, spot
Hmm.
on. Okay, let's go to number 5. And I kind of put this in almost twice.
Okay.
Um, so it's this one is, are you protecting slash rewarding key personnel? And now before I had said, are you protecting, rewarding highly compensated folks? And that we would do with perhaps a non-qualified plan. So in one of the clients I have now, we have a standard safe harbor plan, and we have a profit sharing plan. And then on top of that, we have for the highly compensated folks, we have what's called a non-qualified plan.
Okay.
Um, and that's a great idea because it can actually help you get to the point where if you're going to sell the organization, you've got what we call golden handcuffs on folks. Um, but the point that the part of that I want to really bring up is that buy sell agreement.
Mm.
If you have a partner and selfishly you're thinking, if my partner goes away, do I want to be in business with that person's spouse? Love that person, he seems like a great guy, but I'm not so sure I want to be in business with him. So and conversely, that person may not want to be in business with your spouse. So having a buy sell so that you don't have that issue is really important. And I think that's a great way to shore up your plan, to make sure that you're protecting each other, right? Just in case something happens to that person. Does buy sell make sense to you?
Yeah, in fact, it's so interesting. I have one of my good friends. The company that she works for is going to something just like this. Um, he died unexpectedly, so they were not prepared for this at all. And so there was a partner, and then there's a wife.
Yes.
and um, they are they're at litigation mode right about now because
Oh,
they didn't. I mean, had no idea that he was going to die. I mean, he had a sudden heart attack, so it wasn't like he had like ongoing chronic
yeah.
health issues. He didn't, and so they are. But it's going to devastate because the wife wants to sell the company and the partner is still there. So I don't know if there was a buy sell. I don't know what it was, but I do know that they're in battle mode right now. So
Mm,
you're right.
yeah. Yeah. Chances are there wasn't a buy sell,
Yeah.
and there because if there would have been, then the partner would have bought the wife out, or that insurance program would have done that, and she'd be off onto where she wants to go there. So
Mhm.
I would say there's a pretty good chance there wasn't a buy sell, and that's exactly what happens. Either that person ends up coming into the organization and not knowing anything about it except what their spouse told them over the dinner table, um,
Mhm.
which is pretty slim, or that person, as you just suggested, decided, I don't know anything about this business. I do need the cash. I have children to raise, a house to take care of, a standard of living to keep alive.
Mhm.
I want to
Mhm.
put all this behind me so that I can go ahead and live my life. um, there's that, and so that it's only an insurance policy, but that helps move that situation along so that the partner can keep that going concern, make sure that they are protected, and that partner that had the spouse, they can go about their business, which is pretty nice, I think. So, myself,
Exactly. And also you just, that person's grieving and sometimes the way they lash out is with anger and not, not quite as rational. To sit
yeah,
down and have a conversation with the other and whoever knows what other emotional things were going on prior to that. So it
yeah,
all kind of culminates when you lose a loved one. Your raw emotions are front and center, so to speak.
yep, yep, yep. I think you're spot on, spot on.
Mhm.
Okay, number six. Um, this is, of course, as you know, one of my favorites. It's actually, is your plan helping your employees reach their retirement goal?
Mm.
So, um, are people actually using the plan to help it get to their retirement goal? Does that mean typically you need some education? Well, yeah, it does. Does it also typically mean that you may need to consider a match? You know, um, often I've been heard to say that it's very tough to get employees nowadays, and
Mhm.
sometimes it's tough to get employees nowadays because your benefits are horrible.
Mhm.
It's one thing to say we have a 401k plan. It's another thing to say that this 401k plan actually helps you reach your retirement goals. And I'm not just talking about the investments, because those are important.
Mhm.
I'm also talking about the education that comes with that, the buy sell, the structure of the plan. Not everyone can do what we call a safe harbor plan, where they put in, oh, what is it? 5% and the employee puts in 5% and the employer puts in 4%, or the employer decides to give everybody a 3% match. Not everyone can do that. Not
Right.
every organization is set up that way. So some organizations may need to have a different kind of match, but still encourage their employees to contribute. And I'm thinking of one where an employer decided to match uh, 50 cents on the dollar for the participants. But in order for the participant to get there, they had to put 10% in the plan. So what does that mean? It means that at the end of the day, that participant was putting in, if they include their portion as well as the employer's portion, they were putting in 15% of their income, uh,
Mm.
in order to help themselves reach their retirement goal. As an advisor, I like 15% of your income. Most Americans, if they're over the age of 30, need to contribute 10 to 15%. So encouraging your participants to get 15% into the plan, I think is a really, really good thing. And maybe you have to scale that back a little bit. Maybe you get the whole employer contribution at 6%. It's what we call stretching the match. But the upside of it is you get to encourage your participants to actually reach their retirement goal, right? And I think that's so important because it is a retirement plan. Another thing that we have a little bit of consternation over, we may as well go into it now, is the match. I talk to many employers and they suggest, this is not a bank. This is actually a retirement plan. So we don't want to set up a situation where people are coming in, getting a loan, paying it off, getting a loan, paying off, getting a loan, pay it off. And we don't want them borrowing all this money all the time. I have to admit, I have seen some very interesting situations. I was doing meetings at a university on the East Coast once, and I ran into a couple who were both working at the university. And the gentleman said to me, "We don't like to let the 401k get too big. We kind of like to pull that money out of there a little bit so that, we can kind of keep it at a moderate level." And I pretty much shut down after that. I did. I just didn't want to listen to whatever else this man had to say. So, probably not one of my more gracious moments, but I thought that was the craziest thing I'd ever heard of. Anyway,
basically saying, I don't care about them. I'm only caring about me.
I don't even know if he was talking about them. It was only, I don't know. I just don't know, Crystal. You put money in the plan and it's for your retirement, and they don't get it until after you die. I just don't know. I don't know. Maybe some serious education. But anyway.
It sounded like I don't care about them. It's about me.
Maybe. So anyway, the point of the matter is, have you set your plan up to help your participants reach their retirement goal? That should be one of your focuses there, rather than just having a plan, right? So let's review. Number one, we've got, if you're an employer, of the 6 ways to make your plan better, to improve your plan. Number one, you got to benchmark the plan. One of the few ways you can say that you're actually on top of running this plan for the benefit of the employees is to take a look at those costs and make sure they're in line. So number one, benchmark your plan. Number two, are you protecting / rewarding your highly compensated folks, right? Because they're in the plan as well.
Mm-hmm.
Right? So how are you taking care of them? Number three, is your plan rewarding long-term employees? These are the folks that have been with you for a while. You want to keep them with you. So what kinds of things are you doing to make sure that your long-term employees stay with you? That could be a profit sharing plan where you could put in a vesting schedule.
Right.
It could be some extra type of reward program. It could be a non-qualified plan. Whatever it is, you want to talk with your advisor, your third-party administrator, and make sure that you're rewarding those long-term employees. And then, of course, number 4, does your plan reflect the organization's needs? Do you have a bunch of folks who are over 60 and need some help with Social Security, Medicare, or do you have folks that are under 30 that are looking for help with paying off college loans, or establishing an emergency plan? Or do you have folks in the middle that have both of those people they need to deal with, and so they need a little bit of each, right? So that's number 4. Number 5, are you protecting / rewarding your key personnel, right? Or you can do that with a non-qualified plan. And also, this is where I like to put in that part about, do you have a buy-sell agreement if you have a partner, right? That's not going to be a very good plan if you have to sell the business because that person wants you to, or if you have to be in business with someone that you really don't want to be in business with.
Right.
Let's put it that way. And then lastly, um, is your plan actually helping people reach their retirement goal? Maybe right now, because you're just starting this thing out, you've got a plan that's set up in this particular fashion because that's all you can do. As your organization gets more mature, as you hire more employees, as things get better, you can change your plan to make
Mhm.
it more cognizant of people needing to reach particular goals to reach their savings amount. That could mean having discussions about that emergency plan. That's something that I preach to the employers that I work. Talk about having an emergency plan so that you don't have to rob from your 401k if something happens, right? So those are the six. What do you think?
I think that's a good idea, and I like the fact that because there is a big issue with employers finding quality employees that really will bring value, as I said, to their company, and so just something as small as this retirement plan, especially even for your younger populate your younger employees, knowing that you care about them down the line, right? But especially for your employees that's been with you because they've proven that they're committed to the company.
Point. Good point.
And years ago, when I worked in corporate America, and that was seems like a long time ago, but there was a point where employers really cared about the people that worked for them. They were like family, especially
Mm.
smaller companies, not maybe not big conglomerates, but smaller companies really cared that their employees were happy. And so this is something that you can do for their future because at some point they're not going to be with your company forever. But that wisdom, that brain trust that they bring because they've been working there for a long time. They know your company. They know they know the mission and the vision and your goals. Yeah, you want to. I think you truly do want to invest in them.
Hmm. I think you're spot on. I would just add that when we talk to employers about that retirement plan, we definitely want them to take a look at setting it up so that people can actually reach retirement. Because as people come into the organization and become, I mean, hopefully they'll come into the
Mhm.
organization and stay there for a while, although now that doesn't seem to be the case. But hopefully, as they come into the organization, they get those skills and they turn those skills into things that can help the company grow and survive. We
Mhm.
want them to stay with the organization long enough, but then as we know, as we start to get older, we start to become more expensive.
Mhm.
So, as employees.
Mhm.
So, if your goal is to bring them in and matriculate them out, because we need to bring in that younger crew that's going to, bring in fresher ideas and be fresher and more communicative with our customers.
Mhm.
It'd be nice for these folks not to be hanging on, and I've got some folks that are doing that right now. They're hanging
Mhm.
on just so they can get that 401k because they didn't have it back in their earlier days. And so now that's all they're working. And they're just doing the bare minimum to stay involved, right?
Mhm.
So one of the ways to get people moving through your organization is to get them in that 401k plan, get them in early, make sure that 401k plan can actually help them retire so that you can get them out of the organization, save some money, and put that money on people. This sounds really bad, but put that money, spend that money on employees that are a little bit younger. All right. I mean, you can do that without this being ageism, because I'm there. I'm at that ageism point. But
Right.
we also have some folks that are, they're just working just to collect that 401k or what have you, maybe just to do just for the benefits or what have you,
Yeah.
which is not exactly what you want if you want folks that are actually helping that organization thrive. Right?
Yeah. Yeah.
So,
Like I say, it's I always say a company's most valuable asset are their employees.
it's true. And it's by far the most expensive asset generally as well. Right.
Mhm.
So
Mhm.
it certainly is worth taking care of and looking out for and understanding the needs of that asset. Right? Okay, so I'm going to read your bio one more time, and
All
then
right.
I'll give you the last word. Is
Okay.
that
Sounds
fair?
good to me.
Okay, here we go. Hello, everyone. It has been my pleasure and honor to uh, talk and work with Crystal Mitchell. She is a business coach and consultant. She's the CEO of Mitchell Business Solutions, co-director of Recycling Black Dollars. She's the co-host of The Business Zone with Crystal and Gilbert, another weekly online radio show. She's an instructor at Mount San Antonio Community College, a certified network for teaching entrepreneurship instructor, and a QuickBooks Pro Advisor financial strategist. Crystal, you have the last word.
Oh, thank you so much. Yeah, I think just knowing that at some point we're all going to retire, even those of us that are entrepreneurs, but it might be longer down the line, but much further out than your individuals that are working for companies. But it is inevitable that that's what's going to happen. So really understanding what that really involves and what that means for you and early planning is the best way to be successful in your retirement. Than if you wait to the very last moment. So, and just understanding, and from an employer standpoint, again, your best asset is the person that's working for you on behalf of your business. Because you can't grow a business if you wearing all the hats. You have to have valuable employees that can help you carry out your vision. So, these are just some of the ways you can do that.
Awesome. Great points. Thank you very much. It has been a pleasure. I will see
Mhm.
you and everybody else next week.
All right. Bye bye, everyone.
And maybe these slow